Hey, good morning. Good morning, everyone. Jason here. Hopefully you're all awesome and well wherever you are. Give us a shout out in the chat if you can hear me. Thanks, Nick. Thanks for the shout out for last night. Glad you enjoyed the session. Quick hellos to Lauren, Alison, Brendan. I can see a few of you on right now, but hopefully the tech is sorted. Back in my mojo right now, so good to see you guys jumping on. Peter's there. Hey, morning, Bob. Morning, Shane. Good to see a bunch jumping on. Thanks. Good and clear. Fabulous, mate. Thank you very much. Good to see. I'll do the quick intros as we always do. Jason Witten's my name. Most of you know that already. People like Sharon and Bradley. But if you're brand new, been property investing over 20 years, coaching property investors across Australia and New Zealand over 18 with my team, my crew, and each morning we get together with cool, crazy cats like yourself who are into property investing, like Chriso. Good morning, mate. And you know what? We enjoy our little wealth coffee chats. We call them wealth coffee chats. Been doing them for about 2 years. I think it's my third year now, kicking into them. And each day, maybe just grab a little bit of something from the marketplace and have a bit of a yarn, have a bit of a chat over a nice warm coffee. So welcome along if you're brand new. If you're new, give us a shout out in the chat. Tell us where you're from. Give us a little bit of an understanding of what you're up to. But last night we had Dr. Andrew Wilson, one of Australia's best independent property economists, drop by and do a bit of teaching with our mentoring and coaching clients, which was awesome. So away you go. So morning, Laura, one of the team there. Morning to you. Great to see you. Oh, Shane, you're flying in from the Sunshine Coast, the lovely sunny coast. Good to see. As we roll along. But hey, listen, this morning I was going to chat to you guys about the interesting things going on. It was great to hear from Dr. Andrew last night, which kind of reconfirmed some of the conversations we've been having about this conversation going on at the moment and will continue in the near future about property prices falling, or property prices, the boom is over, property prices to fall, the clickbait rubbish that comes out in the marketplace. Hey, good morning to you, Brendan. Mate, from wet Sydney. It's a bit raining down there. Yeah, it's been a bit like that around the traps, isn't it, mate? So listen, this morning I wanted to talk to you guys about the 6 key drivers, the 6 main drivers that drive marketplaces along. Certainly over the last 22 years, paying attention to the property market and the things that drive that market along is pretty important to understand. And, combining those together as property investors and understanding what's going on makes us more informed. It makes us smarter, better when it comes to our decisions as property investors. So we're going to dive into that this morning for about 15 minutes right now. So hang on to your hat as we dive into those 6 key drivers. Let's see if I've got my right color up on the board. The 6 key drivers, the 6 key things that can affect the marketplace positively or negatively, let's say, when it comes to the property market in specifics. Okay, so chuck them in the chat if you guys know what these 6 might be. Put them in the chat for me. And it's always good to get a bit of interaction with you guys, the crew. What are the 6 key things, big things, not minor and small things? We're not talking down at suburb level right here. We're talking sort of economically that might affect things as we roll along. You're dead right, Brendan. All right, supply and demand. Okay, supply, I'm going to put it S&D, supply and demand when it comes to the property market. Okay, supply and demand, we're going to talk about that in a minute. Chriso's all over it. Christina, you've done it, which is great. Interest rates. So interest rates can affect it. And the thing is, team, with this stuff, it's never just one thing that does all the work, by the way. Okay, so we'll talk about that in a minute. Interest rates, thanks, Christina. Chriso, you've got some in there, which is great. One that the team are sort of missing at the moment when it comes to some things. We're going to talk about population. We're going to talk about what's the number one risk we face, team. Yeah, there you go. Christina's on it. Christina, federal elections, and that's the politics, or the lunatics. Is that how you spell politics? Politics, policies, that sort of stuff as we go along. And we're looking at, those important things as we go. Down here, jobs, economics, which is great. Thanks, Chriso. Last but not least, we're talking about infrastructure. So that's infrastructure spending, etc. Okay, so some of these kind of blend across each other, but these are the 6 big drivers, 6 big things when we have a look at the marketplace and we have a look at what's going on in each of these when it comes to the market right now. And why? Dr. Andrew Wilson said it last night. I've been saying it for a long time. Migration and borders. Yeah, that's a kind of subset, Brendan, of population. We're talking interstate migration, we're talking international migration, and so on. Okay. So let's go through these as we have a bit of a look at what's going on and sort of give it a bit of a rating, a weighting when it comes to the world of property investing and property. So let's have a look at interest rates. Interest rate right now, and cash rates, as you guys would know, unless you've been living under a rock, are the lowest on record. Lowest on record, team. Lowest on record, folks. I was having a hilarious conversation with one of our young team the other day, and they were gutted. They were gutted that they could only get, I think I told you guys this story, I keep telling it. They could only get a 2.8% interest rate. Only get a 2.8. And they were hoping to get a 2% interest rate. Come on now. Now, listen, I know many of you are a little bit more mature on the call. I know a few of you personally. Hey, listen, back in my day, it makes me feel old now. Back in my day, my first loan was 11%. And I thought that was cheap because my mum and dad were saying that when they got a loan, it was 21%. Crazy times, all right? So interest rates, lowest on record. Let's just say you can get a 3% interest rate today. And let's say they put the interest rates up at some point to 4%. You know what? Won't matter. It won't matter in any significant way, team. The interest rates are not going up any time soon in any significant way, and they will move upwards at some point. But last night we were chatting to Dr. Andrew. That's a long time till that will be coming, at least 12 months, 18 months, 2 years. The jobless rate or the employment rate and also true wage growth and inflation, there's a bit of a mess in there that that hasn't been sorted yet. So we're not expecting this to go. Now you've seen, last night someone was saying, "Oh, why are the banks putting up interest rates?" Folks, if you pay attention, what the banks are doing, which is cheeky, which is bloody cheeky, they are having, this is scare campaigns on behalf of the lenders. You'll notice the bank economist says, property prices going to fall. You'll notice the bank economist says, interest rates have got to go up, blah, blah, blah. That is a self-fulfilling prophecy by the banks because they are justifying them putting up interest rates when there's no requirement from the RBA to do so. All right, so there's some underlying cheekiness going on in that space. Okay, so watch that. They're not going to go up massively. The increase won't affect things in reality too much, and we've got something up our sleeve, haven't we, folks? We talked about this the other day. Up our sleeve, up our pocket, in our pocket, up our sleeve. I'm getting my whatever's mixed up a little. And tell me what that is in the chat right now. Tell me what that is up our sleeve that's coming like a freight train. Freight train that for property investors won't, will counteract or probably accelerate us not caring too much about those interest rates. So interest rates, lowest on record, they're still going to stay low, team. Andrew saying first interest rate with 20%. Andrew, my lord. All right, politics. Yep, rental increases. Dead right, Alison. Dead right. Politics. We've got some elections around the corner. That is the one we don't control. Elections. I think that's how you spell it. Elections. We don't control that one. If you saw Dr. Andrew last night, crew, you know, what our number one risk as property investors is these maniacs changing things. At this point in time, there's not much rhetoric in any way, shape or form floating around when it comes to the property world. The two things that everyone gets nervous about when the politicians start carrying on like pork chops, getting rid of negative gearing and getting rid of or changing or eliminating capital gains tax exemptions or the 50% deduction, okay? There's no talk about that in any significant way at this point. So I think that politics risk is pretty low, okay? So that's you know, rent increases, yep, thanks, Chriso. Supply and demand. Folks, we are in all sorts. We have supply chain issues. We have approval issues. Even though we've had in time a housing boom, a housing construction boom that has very little capability of fulfilling our supply and demand shortage when it comes to the marketplace right now, okay? We have had a collapse in townhouse and multi-unit development. We are at the lowest approvals and construction for apartments and townhouses, which is the major supplier when it comes to population booms in our country, and it is collapsed. It's down 80 to 90% in many of the major cities in Australia, okay? The houses are being built, they're for owner-occupiers, they're not for investors, they're not for rent, okay? You guys know the boost it was for owner-occupiers and first-home buyers and stuff like that. Supply and demand is extremely undersupplied. Okay, I think that's how you spell it. I couldn't fit it all in. Undersupplied. That's my scribble anyway. Lowest on record, still low. Elections, so-so. It's probably the one that we don't really understand too much. You know, they can backflip in a second. Supply, extremely low. You know, it's undersupplied by a gazillion. Jobs in the economy are improving, okay? It is improving. We have now the lowest unemployment rate since like 2008, which is fab. But the economics right now is inflation is a little bit high, and that's kind of counteracting some of the job growth. Hopefully turns into wage growth. If it turns into wage growth, that's great, because that then flows through into servicing, okay? Infrastructure spending, the government is, all governments are spending money from the stimulus, which is great. That's going to flow. A couple of places where, tell me one city, folks, tell me one city that's going to have continuous spending and improvement for the next decade up to 2032. Anyone know that city? It's going to get billions poured into it. Anyone know what that town is? Chuck that one in the chat for me, because I know Sydney, Melbourne, Brisbane, Perth, Adelaide, all of the places are going to have lots and lots of money poured into there. And yep, there we go. Nick, Lauren, you're on it. It's Brisbane. Absolutely Brisbane for the Olympics. Brisbane for the win, folks. And something great about Brisbane internally in Australia right now. Yeah, Maroochydore will get some money. Sunshine Coast will get money. Gold Coast will get money. Anywhere from the Gold Coast all the way up to Noosa. Probably Byron to Noosa's got like a nice stretch of money and infrastructure being installed, folks. Just let's have a look at that one. So there's billions being invested. Projects underway. This is all factual. This is all information you can find and double check for yourself. So, make sure when we partake in the fear and ignorance with the mainstream media and the agendas of banks and other institutions, we double check it with some of this stuff. Now, I said in my little headline this morning, there's 200,000 reasons why the property market is not going to collapse. Absolute bullshit, absolute rubbish, absolutely off base by a million miles, those headlines and that clickbait rubbish going around. Because right now, folks, we have our largest undersupply we've ever seen. We have low interest rates, and we are expecting right now the borders are officially open. Australia will open its borders to all remaining visa holders on the 21st of February, including tourists. They've got to be vaccinated, but I'm not talking about that. We have already got 200,000 visa applications sitting there, ready to go. Ready to go. Folks, that's just 1 year. 1 year. 200,000 to come in. That will continue. Mark my words. I've said it for months now, if not a year or more. 200,000, another 200, another 200. Imagine 3 years in a row, 600,000 people coming to Australia, because it's an attractive place to live, folks. You guys know this. That's why we live here. The two places those visas and migration happen. What happened there? Oh, bit of a meltdown. 200,000 people. Let's see if it saved my role, what we did. Team. No, didn't save it. Oh dear. Oh well, there you go. All of that work and it melted down on us. But the big point is this, team. We have 200,000 plus. 200,000 plus visas, people in the wins, ready to come into Australia. They enter usually Melbourne and Sydney when it comes to student and that type of stuff first. And then second, it is skilled migrants with money, skills and capacity to enter our workplace and our economy and push that economy along. And they need places to live. They need places to live. And our infrastructure, our development delivery system across Australia is absolutely poleaxed right now for all sorts of reasons. 2018, it started. It wasn't COVID. COVID finished it off. It started in 2018. Now we've got supply issues when it comes to materials. Mark my word, folks, it's going to take 3 to 5 years to even come close to fixing up that. The dog ate my homework. It did, Alison. It was out the back there pressing buttons. I don't know what happened. But there you go. My conversation with you this morning, our Wealth Coffee chat. Team, folks, don't listen to that mainstream rubbish. It's clickbait clickbait misinformation, clickbait fear and ignorance. There are some fundamental underlying facts. If you buy a good property in a good spot and you have a long-term vision for your property portfolio, that's what matters. Okay, that's what matters for sure. So there you go. I see no reason to be concerned about it. I see no reason to be waiting for a bargain for property prices to drop. I don't think that's going to happen anytime soon as a property investor. Owner-occupiers who overpay and live in places where you wouldn't want to buy as an investor anyway because the rents are too low, that might be a different conversation. But there you go. Anyway, that's it from me, folks. Wealth Coffee Chat done and dusted. Great to have you guys here. And Brendan reminded me of the two sayings we've got around here. If you're still here and you're still new, we've got two sayings and we say them every single Wealth Coffee Chat. Thanks, Brendan. This thing of property investing is a marathon, not a sprint team. And when you buy well and never sell, you're going to sleep way better at night when it comes to your property portfolio and your wealth in the future. So there you go, team. Great to see you guys. Have a good one. Join me tomorrow around about the same time, 8:10, for another Wealth Coffee Chat. We can hang out, chew the fat, and see if we can't crack the code. All right, you guys be awesome. Be well. Thanks, team. Bye-bye.